If we were to put all of these together, it's telling us we are pretty much near or at a market top. The economic data, some of the stuff I'm going to show you here, shows that we're actually starting to head down. Russell 2000, very, very clear that it has had put in a top and broke down, and now it's got this complacency rally, which we know is generally a late stage or a stage 3 topping phase. Small cap stocks are struggling. Most sectors are down. This is pointing to another big collapse and potentially something a whole lot bigger. The markets are moving as expected. We're sitting very pretty with our positions. We're locked in profits. Our stops are at our entry price. So really, we just have to let this market mature, and whether we hit more targets or we get a trend reversal, either way, we'll get kicked out of the trade eventually. Just question is at what price, when, and where. Now, if we take a look at the weekly chart of the SP 500, we know we go through bullish phases. 2022 was a bearish phase, and we are back into a bullish phase. Right now, we are in this smaller bull flag pattern. When we look at this pattern, we can use Fibonacci extension to get an idea of where the upside targets are in the intermediate term. We have formed this nice bull flag pattern, which we've had a nice rally up, and now we're flagging sideways here, and now it is continuing to move up. We hit the 618, pause there for the week, and now we're starting to head up towards this 100% measured move. It's not a whole lot more upside based on this chart pattern. We're only looking at 1.75% or so. And once we get there, we could see the market take a little bit of a pause or pullback from that area and maybe build another little bull flag, and maybe it wants to break higher from there. We'll just have to take it one bar at a time. But I do want to touch on some interesting analysis. If we take a look at the markets from back in the tech bubble, where technology stocks had a total weighting in the SP 500 of about 33, 34%, we are getting right back up into that nosebleed area. That being said, this time is different. It's always different every time, but it's interesting. The market, doing something very similar. The PE ratios still are way out of whack for the average. So things are overpriced. We are ready for a reset based on PE ratios, price to earnings. And this tech bubble back here obviously was very empty. All of these companies were just web pages and shells that nobody made really any money. It was all hype and feeding frenzy. And of course, what goes straight up comes straight back down. This time it's been a grind up. Technology stocks now are serious companies. They make a ton of money, very profitable. So there is value in these ones versus over here. But again, PE ratios, everything is pretty bought. The AI bubble is stretching things to the upside, where most of the market is panicking, selling off, stocks are struggling. It's completely masked with this tech bubble. We have Apple has a bullish chart pattern. When we look at this bull flag pattern, Apple is primed and ready to rally about 13% to about 240 a share. They've talked about AI getting introduced finally, because their Siri is the worst robot or thing ever invented. Definitely can't pick up my voice or do anything. So exciting to see that they're getting into the AI space. I would think Apple would crush it. And that's probably why we're seeing investors pile into this sector. But we are seeing NVIDIA rally, the semiconductors rally, and Tesla's looks like it's trying to put in a bottom. It's starting to rally fairly nicely today as well. But I think there's more uproom in this tech bubble that's going to stretch this market higher for a few more weeks or potentially a few more months or into elections, however long that goes. So let's take a look at something really interesting here. If we look at the stock market and the economic cycle, I got some new analysis here, some interesting charts. Gold tends to do well. Energy stocks tend to do very well. Both of them are trading up and near all-time highs. Industrial capital goods trading up at new all-time highs. If we were to put all of these together, it's telling us we are pretty much near or at a market top. And the economic data, some of the stuff I'm going to show you here, shows that we're actually starting to head down, which really puts the stock market kind of in this major late stages of a topping phase. We are very, very close. And if we look at the charts, let's take a look at this interesting chart. So above here is industrials, gold, and energy stocks. And the bottom here is the equal weighted SP 500, and it goes back to 2006. What's interesting here is the stock market sold off and started to go down, when we saw these late stage sectors and commodities perform the exact opposite. They rallied and pushed higher while the stock market struggled. Eventually, they will sell off. As I said, when the tide is going down and there's mass panic selling, it pretty much pulls every asset down with it. But there will be a period of divergence where these do well, and they are doing well, where the stock market is actually struggling at that same time. There was a big rally up, a year and a half consolidation, and then it took off. We've seen very similar type of price action, a rally up, it's consolidated, and here we are pushing higher while the stock market, when you look at the equal weighted stock market, it's really just kind of trading in double top territory. Maybe it's going to push higher, but overall, we're definitely seeing big outperformance in this space and doing very well while the stock market is struggling. And again, big techs are really lifting this market up. When we look at other different assets, let's just go back to the daily chart. Let's go take a look at the Russell 2000. I'll go back to the monthly chart of the Russell 2000. So we're looking at the same time scale. Russell 2000, very, very clear that it has had put in a top and broke down. And now it's got this complacency rally, which we know is generally a late stage or a stage 3 topping phase. Small cap stocks are struggling. Most sectors are down. This is pointing to another big collapse and potentially something a whole lot bigger, especially if we were to go down and break these levels. But this topping phase tells us we should come right back down to this level, and it could get a whole lot uglier. Not that I'm a doom and gloomer, but there's a lot of people that are pointing to this type of analysis as well. And if you weave everything together, that's kind of what it comes out to from a technical standpoint and an unwinding of economic things. But of course, the Fed and the governments always have a way to keep throwing more bandages on and kicking the can down the road. But we'll see. Eventually, there will probably be a breaking point, and we're going to see something ugly. But until then, we're going to keep riding this market higher. I've been bearish for a long time, yet we keep riding the market higher and making money. So we always have to disconnect what I say, what I think, versus what we actually do with our money. The analysis is to plant the seeds, have your mind mentally prepared, your emotions under control, knowing this stuff can happen, but we make money when prices move up, and we ride those trends. And we make money when they fall, using different investment vehicles. So let's go back to the daily chart here, and let's look at some shorter term analysis. If we look at, I talked about this in the band morning video here as well. We actually we had panic selling this morning in the market, which, here we go. We had panic selling this morning. It's hard to see, but we actually had some panic selling here in the morning over on our panic selling ratio. And of course, if we step back a bit, we had FOMO here before, a huge gap up in the Russell 2000. Everybody piled into small cap stocks for a day thinking, here they go. And then really we've had 3 days of panic selling and the market has sold off. And we're just finally starting to see a little bit of a bounce here. But what's interesting is small caps have sold off. But when we look at the NASDAQ for that same time frame, even when there's panic selling, and people are dumping stocks, the technology and the NASDAQ and the SP 500 are going higher. And that's telling us there's no doubt we are in a tech bubble. Technology just keeps ripping higher and lifting these indexes, even though most stocks are falling. So that, is another red warning sign, flag in the air that we need to be cautious. But remember, some of the biggest trends, typically some of the biggest percentage moves will happen right at the end of a trend, meaning this market could go parabolic and skyrocket and catch a lot of people off guard, squeeze out a ton of people who are short, and then eventually it will turn around and collapse. So you never want to, that's the whole reason why we follow these trends, is because you never know how far something's going to go. You never know which one is going to be a multi-month run or which one is going to kick you out in a week or so or a couple of days if it doesn't work out. The key is to identify, take the trades, know you're going to lose some, know you're also going to have some big winners that will get you back out of the hole from the occasional losses that we will take going forward. So let's take a look at some other assets here. We've got bonds are moving down. People have been moving into bonds over the last little bit. People keep thinking the Fed is going to start cutting rates. I don't think they're going to do it anytime soon. Not until there is some serious blood in the streets in terms of stocks collapsing and some type of bank issue maybe. I'm not sure, but usually we need to see the stock market down dramatically, 10, 15, 20% easy, and then they're going to start doing something. But they need the super wealthy to take a lot of pain, and then they're going to start making changes to try to protect the markets and keep it up with the rate cuts. So people are moving into bonds, expecting rates to get cut. I do think bonds are going to be a great opportunity down the road. They have been in a major bear market, but it's looking like it is trying to build a bottom. Eventually, I think it will go higher. And when it does, if we get triggers in it, we will be trading it as we see fit. In terms of precious metals, let's look at gold. Gold down 0.75%, silver slightly down. In the grand scheme of things, gold is still in a very strong bullish pattern, up trading near all-time highs. It's had a little bit of a pause. It is still pointing to 2,600, 2,700, 2,650 to 2,750 an ounce. So it still has quite a bit of upside potential for another big leg to the upside. And we have seen this before. If we go back and look at the monthly chart of gold, let's go back to the same kind of time frame that we were looking at for gold, industrials, and energy stocks. We saw gold hold its value. Let me just grab a pencil. We saw gold. Why can't I draw here? Okay, I'm not sure why I can't draw on this chart, but overall, we saw gold hold its value very well, but really it started to take off right when the stock market was putting in late stages and the stock market started to fall. Gold exploded. I feel like we've already had this pop, this first 3-month type of pop. I feel like we could have another 1, 2, or 3-month pop to the upside. When we look at gold right now, it's got a little pause here. This pause is primed and ready for another 3-bar pop, which will pull us up to 2,650, 2,700, which could put us into a major stock market top. Markets will probably start to weaken here this summer. Gold could keep doing well. So we got a lot going on. I'm still very bullish on gold. Again, I do think when the stock market has a correction, potentially in later this year, and goes into a bear market, we're going to see gold most likely pull down. Now, there's people saying gold's going to buck the trend. It's going to rip higher as the stock market falls. Again, nobody knows what's going to happen, but the general census is when everybody's selling and everybody's fearful and margin calls and debt and people can't service, they have to liquidate things. And we tend to see almost every asset fall in value. So gold fell 35%, 34%. It could fall very sharply again in the next bull market. You know, if we were to just squeeze this up here, take a look. I don't think I can draw on this chart for some reason. Oh, here we go. So we could see gold pop up into this 2,700 area, and then we go into a bear market, and we might see this pull back somewhere right back down into this range. We could see 1,800 again. That is right through the core of this whole consolidation. It's also right here at this high. And there could be, and I've been saying the same thing for many, many months, really actually for a couple of years, that gold should do well and eventually we'll have a bear market and it could pull it back down temporarily. And this will be the last opportunity somewhere after it starts to pull back for it to go into one of these mega multi-year runs like we saw over here. I think we're really starting something similar to the beginning of 2003, or starting something very similar to late 2007, early 2008, where gold comes to life, and then we have a bear market and things take off. But I actually believe we're more similar down over here. Gold will hold up, I think, fairly well while the stock market collapses, but it will pull back. And then we're going to go into like a 10-year super cycle with many corrections and bumps along the way. So if we take a look at, you can see here, this is government jobs as a percentage of total job openings. What I find interesting here, now I don't know the fine details behind this, but I found this chart, but to me, it makes very good sense. We tend to see government start to create all kinds of jobs. They're trying to support the economy. They do everything they can to try not to let the music stop and for the markets to reset and the economy to reset. So they start to create all these jobs. And then we go into a tech bubble, like a real bubble, and things burst. They did the same going into the financial crisis. They create all kinds of jobs, trying to make things look strong, to make people feel confident. Eventually, they can't do it anymore, and the economy resets. We have the financial reset. COVID, going into COVID, they started to ramp things up, and of course, that created another. It didn't create the pullback, but we had another pullback after that. And here we are again. We're starting to see government jobs ramp up. They're trying to support the economy, trying to make things look strong. And this is another warning flag. And the fact that they're creating more jobs, yet if we take a look at unemployment, it's crossed above a 24-month period. We're seeing, even though they're creating as many jobs as they possibly can, the government, we're still seeing more jobs being lost. So, and each time we've seen this crossover, we've gone into a bear market, a major recession, a big correction in the market. So all these things are painting a pretty interesting picture. And when we look at the overall stage analysis, as many of you have seen me talk about, we are in this stage 3 topping phase. This is just like the Russell 2000 I showed you. It broke down. It has a consolidation. And eventually we're going to go into a big correction. The AI tech bubble is masking everything. And the average person doesn't realize we're like literally standing on a cliff, and the cliff's about to break off the part we're standing on, and we're going down. So it's either you get hit with this or you benefit from it, because we can profit from falling markets by changing and trading the assets we trade, by trading inverse ETFs when we get into a stage 4 decline, which is the tech bubble burst, it's financial crisis, it's every big correction after that. Those are called stage 4 declines, and those opportunities. And just a reminder, these short videos are just a snippet, a small taste of what I offer in my premium investing signal newsletter at thetechnicaltraders.com. And if you like these videos, make sure you subscribe to my YouTube channel